Namaskar everyone, I am Dr. Sanjay Monga and we are here to study a small topic but very interesting topic from these current affairs that is happening around us, and this is the US Fed rate cut. This happened in this month of September 2025, and a lot of students have asked this question that how it's going to impact us, Indian economy, not students. So I'm going to cover this in a short session of 10-15 minutes. Let's see how it goes. So the topic to be covered is how does US Fed rate cut affect Indian economy? But before moving to this topic, we have to understand some basic terms, like I'm assuming that you guys are not aware of even fundamentals. So let's start from the starting point. शुरू से शुरू करते हैं. So what is Fed or US Fed? We'll discuss it. Then what is the Fed rate and what does it mean that you're cutting it? And then how it's going to impact the US economy and also Indian economy, although our concern should be always Indian economy. So on this moment, we will understand this. So first point, this guy, here it is written, the Board of Governors of the Federal Reserve System. So what is this Federal Reserve System? We have RBI in India, and in US they call it Federal Reserve. So it is the Federal Reserve building in Washington DC, United States, and a better building we have made in India, that is RBI building. You can see that India is always better or best in all these things. So what is US Federal Reserve? Actually, US Federal Reserve is not a reserve, because with name you feel that it is a reserve of money. It's not actually a reserve of money. It's actually a central bank which runs the US financial system. So this you have to understand, that it is the name of central bank, and these guys use small slangs in their language. In India, we call our Reserve Bank as RBI in short. RBI, just 3 letters, and they call it Fed, 3 letters. But a lot of people do not understand just with word Fed that what is Fed. So it's short form that they have taken from here. So whenever they use the word Fed, so for you it should be US Federal Reserve Bank. I showed you the picture also of the bank. And now in any country, what does a central bank do? So mostly you will find that these type of central banks have to promote the health of the economy in all domains, overall health of the economy, focusing particularly on finances. In India, RBI is involved in so many functions: currency management, forex management, monetary policy, so many things. You can go to RBI site and see these functions. Similarly, there in US, they have to perform parallel functions. There was a great crisis in US, so they created this Federal Reserve in 1913, and the main job of this, the context that I'm taking here is interest, so this is monetary policy related. So they have lots of tools, and one such tool is the interest rate. In any banking system, interest rate is a very, very important tool. In India, we call it repo rate, repurchase option, or we can call it policy rate. It's a part of monetary policy of India. And same way, in any country you have the benchmark rate or the policy rate. These type of terms are used. So today we will focus on rate, and this rate is the basic rate on which all the other interest rates are going to be determined. Now what are the other options? Let us understand. Suppose I am talking about any kind of interest rate. The first important interest rate is what central bank charges from the commercial banks or the other banks like the rural banks, regional banks, cooperative banks. So what central bank is charging from the commercial bank for giving some loan? So if this bank gives a loan, they have to charge you some interest, and this interest is basically known as policy rate. If it is India, we call it repo rate, and most of the students do not even know how to write repo. Repo is short form of repurchase option. So whatever they charge from the commercial banks can be based on the condition, can be a repo rate, or it can be a bank rate, it can be a marginal standing facility rate. So probably when you read the Indian banking system and particularly RBI and monetary policy tools in particular, you understand these type of terms. But in America, they do not use all the same terminology, so they generally call it Fed rate. So in US, the same is known as Fed rate. So this is the federal funds rate, or shortly called Fed rate. So this was the news that US Central Bank Open Market Committee on Wednesday 17 September announced that it has decided to cut means obviously reduce, decrease. So they have decreased the interest rate by 25 points. So whenever you write points, in India we call it basis points, BPS, so it means 0.25%. So in 1%, you have 100 points. So obviously, in 1/4 of a percent, you will have 25 basis points. So they have cut it, and now the range is this. And there is a range of interest, which means that there will be a borrowing rate, there will be a lending rate, right? And there can be a ceiling rate or a floor rate. So you can have the highest rate and the lowest rate. So those type of bands, this is known as corridor, interest corridor. So there is a minimum, there is a maximum, and the whole range is known as interest corridor. So now interest has fallen into this corridor. Now a question that you can ask me here is, why do we cut interest rate? So if I increase the interest rate, it is known as, when you increase the interest rate, it is known as contractionary monetary policy. Contractionary monetary policy, which means that interest rates are high, so borrowing will be low. Suppose you have to borrow some money. When will you borrow more? Less. Interest rates are favorable, so you will borrow more. So when interest rates are less, you borrow more. So it is called as expansionary monetary policy. So during inflation, any country has to decrease the money supply, because inflation is caused by excessive money. You have to reduce the money in the economy. It is measured by M3 in India. So by increasing the interest rate, you can decrease the money supply in the economy. Borrowings will be less, people will borrow less, and then if you have a deposit in the bank, interest rates are going higher, you will put more money in deposits. So more money will come in the banks, and that is why it is known as expansionary monetary policy and contractionary monetary policy. People will not have money. If interest rates are less, they will buy more loans, they will withdraw from the bank, and their money will be expanded. This type of policy is good when you need to grow. So when growth is needed or when employment is needed and prices are under perfectly controlled, there is no tension of inflation in the country, then we follow this policy. So US rate cut is the news. What does it mean? That they want to expand the money supply, because in the US economy, inflation was high 2 years back. In 2023 it was high. Now inflation is controlled, but you know US has a tough fight with China and even India these days. So they want to expand their manufacturing, they want to increase their production, and that is why they want industries to borrow money and invest in the resources and increase employment opportunities. So this is probably the reason why we have it. So this person who was on that picture, that person is declaring this interest cut. So this move by US Federal Reserve will provide some respite from the high borrowing cost in US economy that have loomed over the consumers. The benchmark rate is the rate at which commercial banks borrow. So this is going to be affected, as I told you. Now this person was Jerome Powell, that was shown in that picture, and it shows that the economy is influencing the central bank's policy from opposite directions due to weakening jobs market. So it is very clear that they feel that employment is less in US, and you would be surprised to know that India is, having a lesser unemployment rate than US, and India's inequality has also, gone down. So India is 4th ranked in global equality these days, even by better than US. So Gini coefficient of India has reached around 25, and for US it is around 41. So we are better in equality also, and this is the first cut in this particular year, 2025. Moving on, we have to understand that what is the benefit of such cut. So I just have explained to you in short that why do we cut. First point, when we cut the interest rate, your cost of borrowing is less, so you borrow more. So if consumers borrow more, there will be more demand in the economy, there will be economic growth because of higher demand. And you can understand that Indian government has also done the same thing. They have done a GST cut, and from 27 September 2025, when I am just doing this recordings, you could see that we are having more of the demand in the market for last 2-3 days. So this is the benefit for the borrower. Second is that this is a negative impact for US, because interest rates are compared from one country to the other by the foreign investor. Suppose you are a foreign investor who can go to US, and you can even come to India. Wherever interest rates are high, so here the rate of interest is going down, here the interest rate is more as compared to US. So a lot of people, instead of going to US, they will move their money, and this situation is known as capital flight. A lot of people who are already invested in US market, they'll move their money from US to countries like India where interest rates are high. So this is known as capital outflow or capital capital flight. So it's a negative impact for US. This is a positive impact for US, because there will be more of loans, more of lending activity, more of production can start. And this way, other economies will also be affected. By changing the banking and the interest rates in US, the production, demand, supply of goods and services, the lending and borrowing, the investments, all these things are going to change. So there will be a change in the demand and supply for dollar also. So when dollar will move from US to India, so in India the supply of dollar will be more. FDI will come, FPI will come, more investors in US will go to Indian stock markets. So more dollars coming to India means dollar price will be going less. If you have studied demand and supply in your school or otherwise, then you know that whenever supply increases, the supply curve shifts to the right side and the price goes down. So by having a higher supply of dollars, you can find that the dollar goes down, and this may improve the value of rupee. And you have understood that these days rupee value has been going down. So we saw 88.80 as the last low for the rupee. So rupee can move upside, dollar can move downside. This can be an international impact or global impact. Now we are here to understand impact of India. That's my last thing in this topic. So how it is going to help or affect India, that we have to study. So interest rates have a relation with the unemployment, employment also, but we have to be concerned with India. So as I have explained to you, there will be a scope for higher investments in India. More FDI will come to India, more FPI will come to India. Now what is the difference? These are long-term investors who come with their product, their brand, their management. And FPI means that pure investor who is sitting in US is moving money to India in Indian stock market. This money will be invested in Indian stocks through stock exchange. So that will increase. So investments in India will be more. The stock market sentiment will be positive. In stock market, you hear Sensex and Nifty these days. So it is a good situation for India. When huge, things will come in market from America, the demand for Indian shares will also increase. So it will be a bullish movement in stock market. So even bull will be happy in India. As I just told you that it can have a positive impact on Indian rupee. Dollar can weaken, and then Indian rupee can strengthen in stock market, because in forex market, because there will be lot of dollars coming and dollar price can go down. And in last 1-2 years we have seen that India's growth in forex market was not as fast, although our finance ministers have explained it, that rupee is not weakening. Dollar is also rising, rupee is also rising, but dollar is rising faster because dollar is increasing in value faster, rupee increasing is quite slower. So in comparison, you find that rupee gets weakened. It's a wonderful concept. Hope we meet again and I have this opportunity to tell you the impact in forex market. Today we are stopping here because this was a small topic which we planned for today's session. I hope you enjoyed this session. Thank you very much. God bless you all. Bye-bye.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.